Hey everyone, this is Bergman, founder and CEO of IRA Financial. Welcome to another episode of AdBits, where I will be sharing bits of knowledge about self-directed retirement. If you want to learn more, you can subscribe to our YouTube channel and follow us on social media. Just search IRA Financial. Hey everyone, and welcome to another episode of AdMail. I'm Adam Bergman, tax attorney, founder of IRA Financial. On today's episode, I'm going to talk about the difference between the self-directed IRA and the self-directed IRA LLC. So over the last 10 plus years in this industry, definitely the most common question I get is, hey Adam, you got two products on your website, self-directed IRA, self-directed IRA LLC. I hear about checkbook control. I read about custodian control, full service. What the heck do all these terms mean? What are you talking about? What is the difference between a self-directed IRA and a self-directed IRA LLC? Well, it's actually pretty simple, and I'm going to dummy it down for you. Let's start with the self-directed IRA. Self-directed IRA essentially means that you are going to set up an account at a financial institution or trust company like IRA Financial that will allow you to do alternative asset investments. If you just want to buy stocks, mutual funds, ETFs, you can go to a traditional financial institution like Fidelity, Schwab, E-Trade. They're going to say you have a self-directed IRA, but it's a regular old IRA because you're really limited to just what they sell. You can't buy real estate. You can't invest in private businesses. You can't buy Bitcoin. You can't buy gold. So they lie and say it's a self-directed IRA, but it's not. It's just a regular old IRA that they limit what you can buy so they can make money on what you buy. A real self-directed IRA lets you do anything the IRS lets you do. And there's only three things you can't do as per the IRS and Internal Revenue Code section 408 and 4975. Can't buy life insurance, collectibles, like art, and you can't do any transaction outlined in Internal Revenue Code section 4975, which essentially means any transaction involving your IRA and a disqualified person. A disqualified person is essentially you, any of your lineal descendants, your parents, your children, your spouse, daughter-in-law, son-in-law, or any entities you control. So you can't buy a house and live in it. You can't take your family to Disney on your IRA. You can't buy yourself a car on your IRA. Otherwise, you can do it. Okay? A true self-directed IRA will let you do any IRS-approved investment. That means stocks. That also means real estate, gold, Bitcoin, hedge funds, private equity, hard money loans, tax liens, tax deeds, and the like. Okay? So a self-directed IRA is a type of IRA that will let you do traditional and alternative asset investments. The only difference between a self-directed IRA and a self-directed IRA LLC is that the word LLC. The self-directed IRA LLC was born in the late 1990s after a famous case, Swanson v. Commissioner, where the tax court allowed an IRA holder to manage an entity wholly owned by the IRA. So since the late 1990s, with the popularity of LLCs emerging, people wanting an LLC for limited liability protection, especially for all those real estate investors, also investors wanting privacy, more anonymity. They don't want people to know that their IRA owns the investment. They'd like to have a generic LLC name. And also for ease, they want to use a local bank that they can write checks out of or do wires out of and not have to go through the custodian, which takes time. Okay, so that's the bottom line. And over the last 20 plus years, the LLC has been a super popular option for many real estate investors. And it really just comes down to those advantages I mentioned, primarily the limited liability protection. So if you are a retirement account investor and you want to do alternative assets as well as traditionals like stocks, you want more control, you like the LLC option, you want some privacy, then you can do a self-directed IRA LLC. The only difference is you're going to use an LLC to make the investment. So let's take an example. Okay, and this example will highlight the differences between the self-directed IRA and the LLC, and I think this will make it crystal clear to all you listeners and viewers on YouTube exactly what I'm talking about. So let's say Adam got $100,000 at Fidelity and he wants to buy a piece of land. Okay, so Adam's going to go on the IRA Financial app, for example. He's going to fill out an application. It's going to take a few days to get the application open in IRA Financial Trust because we're a regulated trust company and we're required under FinCEN to do background checks and know your customer. So in a few days, I'm going to get notified that my account's open. As part of the application process, I completed questions and I provided a statement and provided information on where my IRA's money. So once my account is open, IRA Financial Trust will transfer the money tax-free from my Fidelity IRA, which is in cash, to now IRA Financial Trust. I'll be notified once the money hits the IRA Financial Trust account. At that point, this is where the differences emerge between the regular old self-directed IRA and the self-directed IRA LLC. With the regular old self-directed IRA, the trust company, the custodian, IRA Financial Trust, will make the investment into the real estate. So the purchase contract will be between IRA Financial Trust Company, custodian for the benefit of the Adam Bergman IRA, and the seller, Jane Smith. I'll take title in the name of my IRA. All expenses, taxes, and the like will be paid by the IRA care of the custodian. Okay? If I chose the LLC, I would have IRA Financial form the LLC. I would generally form it in the state I'm going to buy the real estate in. I'm going to call it in whatever I want, so long as it's available. IRA Financial is going to get a tax ID number so I can open a bank account from the IRS. It's going to also do an operating agreement that's going to show the IRA is the sole owner of the LLC and I'm the manager, giving me the control. I'm then going to fill out an investment authorization form, allowing IRA Financial to send me the money to my local LLC bank account, which I could do through IRA Financial and Capital One, or I can use a local bank like Wells Fargo. Once the money is transferred to my LLC, then me as the manager can do a wire, an ACH, or write a check, and the title of the real estate will be in the name of the LLC, ABC LLC, or whatever I called it. It would not be in the name of the self-directed IRA, i.e. IRA Financial Trust Company, custodian for the benefit of the Adam Bergman IRA. That is the main difference right there. That is the only difference between a self-directed IRA and a self-directed IRA LLC is the letters LLC. The first way, the custodian makes the investment is titled in the name of the IRA for your benefit, and you need to go through the custodian, i.e. IRA Financial, to pay bills, take a distribution, and have some control, but not as much control as you would have if you chose the LLC, where you control the bank account and you get to make all those banking decisions. Now, what structure is right for you? I basically say there's no right or wrong answer, right? It's your money. You can do whatever you want. They're both permitted. Generally, from my experience, the people that tend to do the LLC are the people that are going to do multiple investments. Mainly real estate people that are going to have renters in. They're going to pay contractors. They may do some flipping. People that want to have more control. And then other people that want privacy, right? So it's the people that want control because they need it. They're generally in the real estate world, or they're doing a lot of hard money loans and interest is coming back and forth and they're flipping contracts. Or people that just want privacy. Like, hey, I'm investing in this fund and I don't want anyone to know my IRA owns it. So I'm going to use a generic name like, Sunshine LLC. If you're doing one-off deals, like, hey, I'm going to invest in a private equity deal. It's a one-off 5-year holding period or 5-year lockup, or I'm going to invest in my buddy's restaurant and probably not going to see any fruits of my investment for the next bunch of years, then I don't think you need the LLC unless you really care about privacy or anonymity. Otherwise, just do the full service IRA. The beauty of IRA Financial, not to really market my company, but something I really truly care about is that we have flat fees. We don't charge asset valuation fees, which always bothers me, right? Because this is a self-directed account. Why should you pay me if your investment goes up in value, considering I had nothing to do with it? You're the one that made the investment. You made the decision. It's a self-directed account. So that drives me bananas where some of my competitors are charging valuation fees on your account. It's honestly wrong. And I would never, ever, ever do that. So we have flat fees. We have no transaction fees, asset valuation fees. and all you're going to be paying is a flat fee and a check or wire fee. That's it. And the only reason we're doing the check and wire fee is because we get charged that. But guess what? In the next year or so, I've been fighting with my team and my board, and it just also bothers me. We'll probably scrap that at some point because we'll eat that because I think you guys should be paying as little as possible so all that money goes back into your retirement account, which is the ultimate goal of all this. So at the end of the day, they're both structures. The only difference is the cost of the LLC. We charge a one-time setup fee of $9.99, which includes the state filing fee, the operating agreement, the tax ID number. It's a bunch of work to get all this done. Trust me, we're not making much money on this. We're really just covering our costs because some states have $300, $400, $500 LLC filing fees. So when you include that, the cost of doing it, the EIN, the cost of the operating agreement, putting all this together, trust me, we're not making much money, but we're giving you that service so you can have the checkbook control. So all in all, there's no right or wrong. You have both options. Just remember, if you go to TD Ameritrade or Fidelity, they're going to advertise that you have a self-directed IRA. That's not true. It's not self-directed. All you can buy are what they offer you: stocks, mutual funds, ETFs. You can't buy real estate. You can't do alternative asset investments. You can't do what's legally available to you as per the Internal Revenue Code. So just remember that. Otherwise, if you want a true self-directed IRA, you got two options. You can do the self-directed IRA where the custodian makes the investments. Title is in the name of your IRA. Or you can do the Self-Directed IRA LLC, where you have more control as the manager of the LLC. You open the bank account, you control the bank account, you make the investments, and the title to the investments is in the name of the LLC, giving you limited liability protection and more privacy. No right or wrong. It's based off your comfort level, your feel, how much control you want, and really, how much involvement you want to have in the process. So there you have it. Finally, hopefully, you now understand the difference between the Self-Directed IRA and Self-Directed IRA LLC. So if you're on our website or you're talking to friends, family members, colleagues, you can now explain the true difference, what a true Self-Directed IRA is, and hey, what is the option of a Self-Directed IRA LLC. I just want to thank all of you guys for listening. Thanks for your support. Thanks for subscribing. If you're on YouTube, if you're listening on a podcast, please give us a like, 5-star if you're on Apple. You can pick up the podcast, obviously, wherever you want to listen to your podcast, whether it's Spotify, Apple, SoundCloud. Really appreciate you guys listening. We've had an unbelievable amount of support. The Self-Directed Retirement Nation is awesome. We're growing, getting stronger. And one day, we're going to take out the big boys and truly empower Americans to save and have the power and knowledge to be able to save and invest in assets we all know and trust, and assets the IRS allows us to invest in, but unfortunately the big guys are not letting us do it. And that will change. I promise. That is my mission, to democratize alternative assets and give everyone the power to invest in what they want. Since the IRS allows us to do it, why shouldn't we be knowledgeable about the investment options? And it's getting there. It's taking time, but we'll get there. So stay safe, stay healthy. Really appreciate you guys listening. Thank you so much, and talk to everyone again next week.